to these summer market summits before every presentation. We do want to put this high risk warning up there. For those of you that don't know this, trading foreign exchange, stocks, options, or futures on margin carries a high level of risk. It may not be suitable for all investors. Before deciding to trade, you should carefully consider your objectives, your financial situation, and the needs and level of your own personal experience. The speakers on Traders on Trend and the Summer Market Summit provide general advice, and we cannot possibly take into account your own objectives, your financial situations, or your needs. And basically, this disclaimer is really telling you that you have to really kind of govern yourself here. We're giving general information, general advice. Peter was kind of talking about some things he's seen in his life, different things he's seen as far as trading and his different experiences, which I actually thought was really cool. Anyway, so I hope you guys are all getting something out of this, and we're going to go on to our next speaker. Rodrigo, let's pull up the slide for our next speaker, please. And again, these are all people that I'm personally excited to see speak, because I don't see them on the circuit that much. So we're going to talk to Toni Hansen today, and I met Toni a few weeks ago. She is a highly respected technical analysis and a trader renowned for accuracy in bull and bear markets, and that's important because we kind of been going back and forth recently. She started as an equity swing trader in the mid-1990s and expanded her expertise across various market sectors. She's frequently invited as a speaker at trade shows, trading expos, the Chicago Board of Trade, which is really cool, and the International Securities Exchange. She's a popular columnist for TheStreet.com, Real Money Pro, and Alan Farley's The Hard Right Edge. She's an author of not one, not two, not three, but 4 books, including the award-winning Simple Steps to Trading Discipline. Not only is she an amazing trader, she's a really cool person with a really cool story. Toni, how are you?
I'm doing good. How are you today, John?
Fantastic. Great to hear your voice again.
Oh, yeah. Thank you. You too.
We are going to, Rodrigo and I are going to pop off the screen. We're going to give you screen sharing, and the next hour is yours, and I can't wait to see it.
All right. You were asking, if anyone was going to go take a nap, and I have to fully disclose here, I don't have my video on, you guys, because I've been up all night trading. So,
oh, that's right. Where are you at?
I am in Tucson now.
Oh, Tucson.
Yeah. So I kind of have the option of either just staying up and trading through the morning or coming in and just trading in the afternoon. So,
okay.
But the markets were really nice last night. So we have some great trades I want to share with you, because I love to take trades where, when I'm doing these classes for guys like you, that you actually get to see something that has been happening in real time, and you can go and check out the markets right now and get a really good view of what's going on. So it kind of helps traders focus on things a little bit better that might be completely new concepts by getting to look at how they're unfolding. So that's what we're going to be doing here today. Let me go ahead and share my screen with you. And I am going to teach you guys one of my favorite strategies. And this is usually the one that I teach all new traders. I started out, like John said, in the mid-1990s. We didn't have a lot as far as education back then for online trading. The pits were still really active, and people were just starting to transition to the online markets. There's a lot of learning involved. Back then, you wanted to take a trade in and out, you're looking at commissions of $60 or more one way. So you've got to cover your commissions in addition to having a really good strategy. So if you made it 6 months and your account was down only on commissions, that was an awesome thing. Great thing about the markets these days, though, is that it is not as brutal. We have a lot of other options for how we manage our risk, we didn't even have simulated trading back then. They called it paper trading for a reason. You're literally writing things down on paper. But I want to share with you one of the very first strategies that I developed as a trader. And it was based upon seeing a lot of market reversals that were taking place and trying to identify, hey, when do I have a trend ending and when do I have a new trend beginning, and where's the spot that I could get into that trend from the very early stages. So the strategy I'm going to teach you is called the Phoenix, and it is one that literally is rising from the ashes of these downtrends or these stagnant markets too, because it can break you out of a trading range, but it can also go and totally flip and create a brand new trend for you. And in the case of a Phoenix, it's going to be a bullish trend. So these are core templates. You guys can do screenshots of these, go watch the recordings, and take a lot of notes as we go through this class, because I'm going to show you trades that I took over the course of just the last evening here, actually even right up into the opening bell, and how those strategies fit into these templates. So our Phoenix is really just that brand new trend that is getting started. So when we're looking at, let me grab my pen here. When we are looking at the start of our Phoenix, this is the main thing that we're looking for. We're looking for something that has either been in a trading range here, or it's coming out of a really strong downtrend. Now, in this case, we are looking at pretty solid wave development, and there's a lot of ways that you can read waves. I focus primarily upon two-wave movements, and when we are looking at three-wave movements or more, there's very specific things that I'm looking for within those waves. But we're not going to get into a lot of that more advanced stuff here. I just want you guys to have a feel for how to identify this pattern in the live market and take it so that you can study it, you can practice it, and you can start to apply it. So what we are looking at is essentially that very first continuation in a brand new trend, brand new uptrend. So there's a couple of things that you'll see on here, and I'm going to clear this screen here to share with you. So the first thing that we want to look at is, I want to see an upside movement that has a correction that lasts about twice as long as that original upside movement. Now, what we need to see with upside movement is about average momentum. So when you're seeing, V's and inverse V's, that sort of thing, or if you're seeing these large, really sharp movements and then a lot of bars that overlap, another sharp movement, a lot of overlapping bars, that's a pretty average momentum move when you're looking at the markets. So what we want to see is that average momentum move and then our corrective phase. Now, there's going to be a lot of individual things that we're going to drive down and take a look at. So the first thing that you'll notice is a very clear shift in our momentum. We see clean two-wave movements up, clean two-wave movements back. What you'll notice is that each of these smaller corrections can also have two waves to them, and we're going to see variations of those from the trades that I took here overnight. We're also going to look at things such as time development. And by time development, what I mean is not just in terms of our upside move compared to our correction, but also looking at our pivot highs that are taking place. So if we look at the time distance between the start of A and the end of A, and then the start of B and the end of B, where we're getting that breakout, we want A and B to have approximately that same amount of time. So very simple concepts here to start with. And I'm going to show you what these look like here as we go to the charts, and you'll see some of these real-time entries that I took here overnight. Now, entry triggers on this, we're not using a traditional trading range breakout. Usually, when you've got that breakout happening there, you're too late. You're going to be in a situation where your return compared to what your risk is a fraction of what you would have gotten with a much stronger entry strategy that doesn't have any additional risk to it. And that is to take that second wave of correction and just use the break of that smaller wave. So we're not caring about a full range breakout. We want to see that full range breakout when that distance A to B is about the same, but our pivot here can be at like 61.8% or more of the distance between the start of A and the end of A. So if we cut it in half, what you want to see is you want to see that second pivot in that last quarter to third of that time difference there. So your breakout should start to break right around when you've got about that 100% time extension between those pivot highs. Now, target levels on this are interesting because a core target is going to be just looking for 100% move compared to our initial upside impulse move. But keep in mind that the Phoenix is something that typically I am looking for a much larger trend reversal. I'm going to show you one during class here where I didn't look for as much, and I'll show you why. But we're often looking for things to gain momentum or go into bull flags to continue that upside movement. So you can start by learning this strategy by just playing that initial breakout coming out of that Phoenix, but you can also go and use a sim trade at the same time that you're putting your live trades on so that you can look at how to hold those positions for much higher target levels. Now, a couple of key things to keep in mind here too as well. We want to see volume declining throughout this correction. Now, if this is going to the end of the day, you might not see a full volume decline. You might see things kind of go stagnant with the volume. But since it's the end of the day, that's basically the equivalent of if it is dropping. I am not someone that relies heavily on indicators. You're going to see that as a trader, I read pure price action. And I have very set rules though for reading it when I am teaching traders that, you know, kind of to use a crutch. What we use are Fibonacci tools. And one of them I'm going to show you here today because in regards to timing the Phoenix, this specific Fibonacci tool is amazing at helping you nail down the exact time zone that you want to see for that break. Yeah, price action is number one. I started, you know, as a trader, I started with moving averages because that was like the basic thing that people used back then. I've tried out different indicators, but what I found was that when I used and taught pure price action, it stuck better because traders weren't having to learn, hey, when do I use this, you know, moving average? When do I ignore it? When do I use this indicator? When do I ignore it? So we want to focus primarily upon price. And I am purely a technical trader. I come from a background in the arts. I was actually an archaeologist before I became a trader of all things, artist slash archaeologist. So seeing things visually is very easy for me. I recognize patterns quite well. Oh, thank you. So I started teaching trading almost from the time that I started trading because I come from a family of teachers, and both of my parents worked in education. And I knew from them that the best way to learn something is to teach what you know and ask questions and encourage others to ask questions and use a growth mindset, really. I mean, before growth mindset was like this catchphrase that you see everywhere, it was something that the best teachers are going to tell you. They want you. How many of you remember the magic school bus here in the States? What, you know, her Miss Frizzle's mantra. Do I make it sound easy? Oh gosh, no, you guys. I didn't have anybody to teach me the shortcuts, to teach me the things that didn't work and put in all of that effort and have the time to teach too. Most successful traders I knew do not teach. And that's just because they spend all of their time in the markets. I do not teach all the time. I have a class that I do once a day for an hour. And occasionally I do classes on weekends and things like that. But I'm trading. So even when we are teaching and doing our classes at noon, we're looking at the live markets, and I'll spend that week talking about a specific aspect of the market, and we'll look at how it's unfolding. So that's cool because traders get to really see a lot of the more advanced part, but it's like dropping somebody into another country where you don't speak the language and you're a foreign exchange student, you've got to learn the language. So this class is just going to teach the language of this very core strategy that I trade. And the interesting thing about technical analysis is that when you learn one strategy, you're going to start to learn them all because they all flow from one into the next. So our Phoenix here, you guys, this is just a strategy where we are looking at that downtrend, and now we're looking at the reversal of that trend. Now, if you recall from our previous slide, we want to see those two waves up, but here's something that offers an additional pro. If we're looking at our downtrend channel, if those two waves up puncture that downtrend channel, we have a higher chance of a full trend reversal. If we saw a Phoenix that was forming, let's say it came down a little bit here, and you're getting your two-wave correction in here, you've got your two-wave move up, but your correction is still in the middle of that channel, it can go and turn around, but your probability becomes higher that you could start to get more widening up on the larger time frames. So one of the ways to reduce that risk is to wait for the channel to break and then look at your two-wave correction. So this is a pretty core one here. This happened about a month or so ago here. This is one that I was trading again overnight. I do that a lot these days. And this is just, a really basic idea of what that looks like. Now, the main target that we look for is just this as a measured move. But what you'll notice is that when you have situations where the market is kind of starting to shift before it goes into the Phoenix, you have a better chance that it's going to go and continue really strongly. And even if this goes into another range like here, you've got a better chance that that's going to go into a bull flag, or it could even go into a larger Phoenix and continue from that point on. In fact, this was one of the things that I traded overnight here, happened to do this. In this context, such as this, you'll often see things that will look like an inverse head and shoulders. So you'll get your shoulder over here, your head over here, your shoulder over here. Do not Google how to trade a head and shoulders strategy, you guys, because every single one of those initial links that come out, you will lose your shirts if you try to trade it the way that these sites are teaching it. You just can't do that. And that was one of the things that always made me want to dive into what actually creates a good strategy. What are the bones of a good strategy? We're not just looking at something that makes a lower low and then a higher low. No, we need to look at how does this portion actually break down? And what I'm going to show you are a lot of the ways that that happens. I don't use scans these days because I'm predominantly trading the futures markets, but that only has to do with the fact of me being in Tucson these days. So my market hours are always 2 to 3 hour difference from the East Coast open. And I don't like to come in and try to scan through a million stocks during the day to try to find a setup. So I'm usually have the futures markets open pretty much 24/7. I trade gold, oil, sometimes the euro future, sometimes silver, but mostly the Dow, the NASDAQ, and the ES, and the Russell to some extent, but not quite as often. But the nice thing about these strategies are they were developed on other markets, yet bonds too. So I started out in securities, trading stocks. From there, I went into futures. From there, I went into Forex. I do analysis on cryptos, but it's not something that I trade. I'm not comfortable with the risk currently on cryptos. I think it's basically like Forex was 15 years ago. So we're just maybe 18 years ago, kind of in the Wild West days of it. So I like to see markets that have more regulation, and you're not going to worry about completely losing your shirt when things go under overnight, like we've unfortunately seen recently, right? So you can take this and you can use this to trade any market, though. It doesn't matter which one you're interested in. It doesn't matter what time frame you're interested in. And that's what's been really great for me, because I'm always changing, over the last 8 years or so, I focus mostly on the futures markets, but not entirely. So I'll also look at many other markets as well. So here is a little bit of a background of that Phoenix trade here, and you can see how that broke that channel. Now, what's interesting here is that I love trends that have two-wave movements. So in this particular one on our larger time frame, we have that initial reversal, a correction, and then we even have a two-wave measured move as it's going down into that low. So we have a measured move, which is a great level to start to look for reversal patterns. And we have that momentum that is about the same or even a little bit slower than that initial drop. And that, again, is another good zone to look for reversal strategies. And in fact, we have that same type of thing happening in here. You've got your leg, and now we're getting shifting happening. So we've got our two-wave movement, shifting happening. This is a good zone where a Phoenix would set up. Now, we don't have as much of a volume drop that I would like to usually see with this, but just on this 3-second time frame, this is the type of zone that I would be watching for. Now, one thing here that is a little bit more of a con is how rapid that move is. The more extreme that initial move is coming off of the low, let's say it comes up like this, the harder time it has trying to get a really strong breakout going. So I prefer to see something that has a little bit more of a gradual move there. And what that's going to do is that's going to create a higher probability of a stronger move when it comes out. In fact, one of my favorite Phoenixes, version of a Phoenix, is one where it has a bit of a slower upside move compared to the downside. So you'll get the stronger movement there, weaker movement here, and then you'll get a weaker movement here. So it kind of shifts that momentum. And a lot of times it's even more weak as it's coming up, because those are the ones that tend to just shoot higher really fast. So you can see this isn't offering a trigger, which is another issue when you have that really strong start. Getting it to actually develop and trigger into something that is going to go well can be more difficult. And when it does go, it doesn't tend to just have that same extreme momentum. It tends to pop and kind of chop around as it's making its way higher. And a lot of times that will go and end up gaining momentum, but you have to have really nice larger time frame support and trend exhaustion to get that turned around. Let me go and show you some more examples here, because I want to get through a lot of slides so that you guys can really start to put this into your trading here this week. So I mentioned earlier, I don't use much as far as indicators go, but one exception I make is Fibonacci. And that is because this is something that I have tested over and over again in every single market that I've traded, including ETFs. And what I have found is that there are very specific rules for using Fibonacci in trading. It's not like, hey, I can always just go and take the low to the high of a trend. In fact, there's rules based upon how quickly a reaction comes off of it. But these are rules that took time. You know, it took a lot of that growth mindset where I would look and say, okay, well, this didn't hold the fib bands I thought it would, but it still went. So is there a way that I could have made an adjustment that still made it doable? Or is that something that's not going to hold true on the majority of trades? In today's class, we're just going to stick to the basics. So we're going to look at trends that are pretty average momentum moves and just go from there. I'll show you a couple of variations just because that's what I used when trading overnight here last night, but you'll see the same core. So here's a good example of a Phoenix that's in the context of an inverse head and shoulders. And on this one, what you'll notice is that we've got a bit of that shift in momentum. This is actually a reversal pattern called a 2B. We have a little bit greater kind of volume activity here as it's coming into the low versus in here, which is a good indication that the sellers are struggling a little bit more. And then it pops up. We do have that two-wave movement. It breaks that immediate channel here. And then we go into the Phoenix. Now, in this case, we actually have a smaller Phoenix within the bigger Phoenix. So it looks a little bit like an inverse head and shoulders within the context of that pullback. But notice how volume is dropping. So it dropped really well as it was coming into the low here. If we look at our time development, you're close to about that 1-to-1 time development, but the momentum here was still on that average to stronger than average. So it's better if that goes closer to 2-to-1. And that's where that smaller Phoenix comes into play here. So you've got that smaller move and you can use your channel break on that smaller time frame. Usually in something like this, I build into a position. So I'll use some earlier setups, get really aggressive with taking off some of the gains and then, going and adding back in. Not on something of this size though, there's just not enough movement in here. So if I'm trading on something that's, really small after hours and it doesn't have as much movement in terms of price, then it's usually because there is a setup where I expected to have a bigger trend. So I'm not looking for just that 1-to-1 target level, but I'm looking for something where I can get more out of it on continuations of that trend. Here is a look at this where we're going and we're adding those Fibonacci fans. So since this uptrend was fairly average, you can see there's a couple of spots where it has a little bit of a stronger burst in it, but overall there's a decent amount of overlap. What we have happening here is that with this volume really dropping off down here, we can use our fib fans from this low to the high, and that's going to give you these fib levels. So this is your 50%, 61.8%, and 76.4%. And this is your 38.2, and this is your 23.6%. So these are just your average fib fans. NinjaTrader does not have fib fans on their charts, but I'm going to show you where you can get the add-in to add those at a very reasonable price. So when we're looking at the fib fans, the one great thing about the Phoenix is that that fan level is going to continue to serve as a support level for offering continuation trades. So if you get a correction and that correction lasts about that same amount of time as the Phoenix, you have a really high probability that you're going to get a bull flag. In the best bull flags, this isn't going to quite tap that 76.4. I call it a no touchy. So it goes and it puts in a correction that lasts about the same amount of time. And in here, you'll notice that distance between those highs is exactly like I had on that template. It's a little bit messier over here, but on the template, it's the same. So on this one, you're looking at it here. This is A, this is B, A and B. So you got that same time difference. This is a specific continuation that's just called a check mark because it looks like a check mark. You'll also notice you've got the volume dropping, which is really great, again, for the continuations. But if this doesn't quite hit that fib fan again, you are more likely to get something that goes pretty much straight up very, very quickly at that point. So you'll go from your Phoenix to a bull flag to what we call a 1, 2, 3 with that really strong impulse move, and then into what we call a widening up zone where things start to go back and forth, but they can still continue. I use Fibonacci mostly when I'm teaching because in real life, I can just look at a chart and know where those fib lines are going to be just because I've studied it for so long. So I don't usually put them on my charts unless I'm going back and explaining it to people. In fact, often in my live classes, I'll draw that line on there and then I'll go back and I'll add the fib line. It'll be exactly the same just because you get so used to doing it over and over again and you start to get a really good feel for it. Clear this here. So one of the things you'll notice that starts to flip this around is that the momentum begins to change. So it touched it, which we don't really like in order to get the good continuation, but it was still able to do a nice two-wave measured move on the upside. Now, as it comes back again, a lot of times those breaks in the fib fan are going to serve as not only a level where you might be using it as a trailing stop, but also a zone where you can go and flip your positions. And as these come down, if they come back up again, that same fib fan is going to serve as a strong resistance level too. So you can use that to go and time things like a head and shoulders to go and flip things back around again as well. So let me show you what this looks like. I'm just going to pull up a chart here from today. Or actually, this is the first chart I grabbed the tab for. So this is our micro on gold. And the pattern that is in play here is an avalanche. It's the reverse of a phoenix. And let me show you what it was that I was looking at on this one and how to add this fib fan on here. So we're going to remove these drawing objects because I want to show you how this works. So in NinjaTrader, the add-on that I developed is just under drawing tools. Go down to Fibonacci fan, and we've got a nice two-wave trend here. So even though this has a really extreme kind of second portion of this, you'll notice that we really have a high up here, second high, low, second low. So that changes the momentum of the overall move a little bit better. And so what we're looking for is I want to see that the security is reacting to some of those closer fib levels. And then as it comes up into that 76.4% zone, that's where I want to start looking for reversals. Now, in this one, for this to be that core reversal pattern of a phoenix, what it would look like would be this. It would have that two-wave correction going back the other way, and you would see the 76.4% fan hit here, the 61.8% fan hit here. So this is a little bit of a variation where we end up with a bit of a head and shoulders instead. So when I was trading this, what I used was the smaller avalanche over here, which is a megalanche because we had that megaphone forming here. Here's those two waves down, the two-wave correction. And the only difference here is that when we're looking at that portion for the breakdown, when we have it kind of widening up, we want to take our fib band from here to that low. So if you've got this megaphone forming, instead of going to that first low, we're going to adjust the fib band to go to that second low, only in the megaphones here. So what that looks like is this. And then that gives us the zone for our short. So you've got the avalanche forming here. A core avalanche would look like this. It would have a little bit of an upside tilt to it. This is a specific one called a megalanche, but since that's what we've got going on here on gold right now, that's what we'll look at. And so this shows you, there are ways to move these fib bands to more advanced levels, especially if you've got a really strong impulse move on the downside, we'll have to move it over. But there's very specific rules for doing it. I'm not going to get into those here today. I just want you guys to get the basic idea of what we're doing. So again, think of Fibonacci as a kind of a learning tool, like Cliff Notes, right? Do they even still use Cliff Notes? I don't know. But think of it like a Cliff Notes. So it kind of helps you with where the time development is. Is Fibonacci about 70% accurate? I don't know what the percentage is. When we're looking at it in the context of a phoenix, though, it is highly, highly accurate. And that's because we're not just looking at the fib fan itself. We're also looking at those things such as the distance between your highs. So you want your fib fan to have that 76.4% support here, but you also want comparable distance between these highs. You want that average to slightly stronger, slightly slower than average momentum here. You want about twice that time development. And ideally, you'll get a smaller two wave here where you can get a really tight entry. And our stop basically just skirts up along that 76.4% fan. So I call these building blocks of price development. That was a term that I coined way back still in the 90s. And it's really just looking at all of the pieces that come together to create this pattern. You're not just looking at something like, oh, it's just like a 5 to 7 bar pullback into a 20 period moving average. No, we're looking at a lot of other traits like the volume dropping. So we prefer volume to drop more here, and then we get an even tighter drop in volume in that second correction. So if you put all of these together, you guys, you have a trade pattern that is going to be accurate at least for 1-to-1 return, close to 90% of the time. Usually I'm going for 4-to-1 or more on this setup. And that accuracy is over 85%. So this is something you can work with. Yeah, it's a very easy pattern that you can go and you can start to learn a lot of the different variations. So you're starting out easy, but then you're going into more complex variations of the same setup here. And once you get into the habit of looking at sections and building the strategies, you're going to find that you'll learn a lot about other strategies that you're wanting to trade as well. Yep, 80%, 85% for more than 4-to-1 is what we're looking at. I actually had one guy tell me, he's like, there's no way that's possible. So I spent the entire month only trading Phoenixes. And I think I had like 2 stops and a couple of them that scratched, and everything else was profitable. And they were just blown away because it is one of the best strategies out there for new traders that want to learn technical analysis, that want to start with something where you can really define where your parameters are. You can define what you're looking at for a target. You can define where your stop is, how tight you can trail your stops versus how much room you really need to give them. And we'll go take a look at more of those here. So if you have NinjaTrader and you want to add those fib bands, you can get it at my site, tonihansen.com/trade tracker. And it's just $79. And it has an entire course on how to use it as well. So you can see how to apply it to this strategy actually. So you get the indicator as well as the course. Let me clear this here. So here is a fairly recent one. This is one where we were looking at going into really early morning trading here. And this one is coming out of a trading range. So what you're noticing here is that we've got this big V set up, and then we've got this shallower pullback. So here's a two-wave correction. We actually have a little two-wave move here in the middle as well, and then two-wave move coming back down in here. And then there's a little baby phoenix right at the end. So with this, the stop is trailing right along under that low. And my entry that I used was right here. And your measured move target is right here. I actually ended up getting a little bit more than just the measured move on this because this momentum was so strong. So when our momentum is picking up, you can look for a 123.6% extension most of the time. If it has extreme momentum, but it falls short of that 100%, most of the time what happens is it puts in a second correction and then goes. So it basically treats it as a bigger two-wave correction that then offers that second continuation there. Another thing you'll notice on a lot of these is many of the targets will actually start to hit along upper fan levels. That doesn't happen right here on this one, but it is something that we see quite often. So usually when we're coming up and I'm seeing something go really strongly into like 27.2, 23.6% zone, let's say it hits it like this, I'm usually going to try to get more out of it because most of the time it's going to double tap that channel. So I'll go into more advanced trade techniques in there, taking gains off, adding back in, and kind of more executions to get a little bit more out of the trade. And I'll do that in movements into support levels too. So I might have some multiple target levels as I'm building into positions as well. Notice the volume dropping too. So here's another one. And on this one, same type of thing. You're in a trading range, but it's actually part of a larger Phoenix attempt as well. In this case, the pullback here at this level, if we went and we took a fib fan from there to there, this is going to be where your 76.4% would fall. So if we're looking at this for the amount of the correction compared to the upside, you've only got about that 1-to-1 ratio. It's too early. And it pulls through that 76.4% fib band. I don't have it drawn on here, but you can go back and test it out. This was just within the last couple of days. So what you want to look at instead is there something that can go and continue that trend? You could have taken this as like a 2B. There's a 2B here with a smaller one right after it. Or you can wait for that smaller Phoenix to kick it off. Now, the thing that's interesting with this Phoenix here, though, you guys, is that if you look at your distance from the high to the high here, this is that A. Look at where it would be breaking here. So B would be about half A. What that means is that for things to continue, you might get a secondary correction before you get a larger breakout. And if it breaks strongly at that halfway point, that could go and flip things around more easily. So on the smaller scale here, we've got our A and then our B. We're right in a good zone for that. So your smaller time frame measured move has a pretty good probability of making it up to that 100% extension. But the bigger one here coming up, that's a little bit trickier. And you can see where I marked my entry out here as well. I built into this position, but this is just the average entry. It was that 63, which is right about here. This is what I used for the entry on this. And our stop on this, let's clear this, is really, really tight because you're just trailing it up along that fib fan. So as you're moving higher, it doesn't take long for this to get into a level where your original stop is quickly cut in half, and even more as that's pulling higher. This up here, by the way, this is an avalanche. It's just the opposite of the Phoenix, and we actually have a Phoenix over here as well. Check mark Phoenix. Here's another one here. Just shows you this on a little bit tighter detail, so you can see a little bit more of where I was building into the positions as well as where I was protecting some partials and adding back in. So kind of using a little bit more trade management here as momentum was threatening to shift as it was coming into that 76.4. Now, since it still had that really strong impulse action compared to the initial move, I still anticipated it being able to move further, but I wanted to be able to get some better price action on it to kind of take some of that edge off there. And when we get into situations like this too, I'll start to tighten up stops too. So things like breaks of the smaller channel, like if we got an avalanche here, that would get me out of the trade before. So I probably wouldn't have made it up to that larger 100% if that had happened. And sometimes it just does it with a two-wave correction, so I can get back in to get the continuation on the move. Here's just that closer look again with the fib fans here. Here's another example. This was another Phoenix in here. I don't have the bigger slide on this because I was just teaching how to use advanced trade management on this. So this here is where we had the original trigger on the Phoenix. So that pattern kind of extended off there over to the left side here. But you'll notice it then went into that smaller shift here. So this was a position building exercise here. We had some measured movement and then starting to shift momentum. So I protected some of it and then added back in, and again, shifting momentum here. And it did do a touchy, so less likely to go and do that full 1, 2, 3, because it did touch that fib fan that second time. And ideally, we don't want to see that happening in order to get that really strong continuation. But in this case, I flipped the trade because we now had 2 comparable corrections and 3 waves, and then a shift in momentum, flipped it, and then this turned into an avalanche, which is just your opposite of your Phoenix. So everything that you learn about your Phoenix, you can go and you can flip it over. Now I'm going to go through some of these slides here just a little bit more quickly. A nice thing about our fib fans too is they can help show us when things are too easy or too early rather. And notice again how if you had taken that 2-wave correction in there, it gets stuck, it can't quite make it out. It's going at a zone of where it was really only probably less than that 1-to-1 ratio on the upside. but that fib fan again serves as resistance once it breaks. So that can help you if you're looking at something where you're expecting it to go and turn back around. So this was one of my trades last night, and this came in with that nice shift in the momentum, popped up, and it had a little bit of this rounding going on. So this trade is actually one that I call a chevron phoenix. It's a little bit different. We're still using our fib bands, but we're going from this absolute low here, not to these highs, but to our absolute high here. So the thing that you'll notice is that the correction in something like this, where it's rounding, can be shorter. But that has to do with the fact that we're really looking at the entire zone from where it started to shift momentum as the start of the correction. So this is getting into some more advanced strategies, but this is what I happened to trade last night. So I wanted to throw it in here to show it to you and clear this. All of the things that I use are the same. You can see here the initial pullback kind of did a little bit of a pause in here, but then you've got a really clean two-wave move down into that 76.4. I used the channel break there as the entry trigger on this. This is one where I just went all of it in, building it right in there. The volume was really light here. So when you're trading the micros after hours, I don't suggest putting all of your trades on at once, and I don't suggest keeping a really tight stop order on the books because they're more prone to take them out than they would during the regular trading session. So you want to be very cautious about that. But you can build into them pretty easily without a lot of notice, just because of the way that they're added on there. So I've started trading the micros a lot more as far as overnight trading, just because they are more liquid than the NQ or the YMR or the ES in particular. What you'll notice here is the momentum overall, as this broke out, is about the same as that overall momentum here. So I just used a measured target level in this one because in a strong chevron phoenix, this should pop and go and do a two-wave move like that. So that's what we would see if things were turning around really well. But look up here at the larger time frame. This tried to go into the zone of a phoenix, but the smaller time frame shifted into an avalanche. So we were at good support here, but it still had much stronger momentum on the downside. So I was not looking at this initially to have a strong continuation. I wanted to wait for something where the momentum would shift a little further, which is actually going to take us to the next trade here. So here is what I did as that next trade. So this is the first one with the original fib bands right here. And you can see it really held that measured move perfectly. But then we come down again. We are creating this megaphone right into the support zone over here. We get a shift in momentum with a megaphone, and then we get the phoenix. So you'll notice the timing is really good for an inverse head and shoulders, even though we don't have a clearly defined shoulder here. The timing from where that momentum shift starts to that final low to where the phoenix formed is excellent. This is one where I did a lot of building into this position, and you'll notice when the volume got to be its lightest, that is what triggered that full break there. That's what got things really going. And I took off a huge chunk of this position as it came back up into the fib fan that was support, because now that's our resistance level. Let me clear this here. So those are my actual executions on there, you guys. I had a lot more of them because I built in, but that's the average price zone that I was building in. And then here is the one that I took right as we were heading into class. So this is the very last trade I did. And again, we had that shift in the momentum to start with. We had the pop. This momentum was a little bit stronger. And then we went to a slightly higher high. So I treated that as I showed you earlier with the megaphone. And I took my fib fan from the low to that slightly higher high. And that gave me the zone that I wanted to see to start to build into the Dow. And I used the upper levels as the target zones. And this is what ended up getting me out of that position. And it was also right ahead of the open. And I thought about taking everything off here because it was the second test, but we were coming in above these highs. So my thought was that, hey, this is going to try to flesh out more of those stops even more, which is exactly what this ended up doing here. Let me show you the follow through on that quick. I grab my charts. So our NQ. I'm going to actually slide this screen back one so that I can put it up for you. Line 13 here. So what you're looking at is, let's see. Where'd my Dow chart go? God, they're all hiding in the backgrounds here. That's one thing I don't like with Zoom here is that I can't just hover on something and have it pull up the chart I want. Here we go. All right, so going into, because the Dow and NASDAQ were in like their own little worlds here going into the open. So they were not trading in harmony. They haven't been trading in harmony for a couple of weeks. But here is what we ended up seeing. So right as we were going into the open there, that's what I used as the exit for the rest of the position. So I hope you guys learned a lot here in our class and you took a lot of notes, right? So I've got a class coming up here in a couple of weeks where these are videos that are created ahead of time that are going to be released once a week starting on Monday, June 19th. So they are going to be longer lessons that go into more of the details on this particular strategy, as well as the reverse strategies. So it's going to show you instances of where we need to make adjustments with our fib fans. It's going to go into more of the details of adjusting our stops and target levels. So where do we place those larger target levels so that they hit and hold most of the time, that we can get the most out of the trade. We're also going to look at pure templates and step-by-step walkthroughs of live trades and analysis. So this will be some of the things that I do in my League of Traders, which meets every single day, and shows you how that analysis unfolds as we're going throughout the course of a position as it's unfolding. So this class is going to start on June 19th, and it will have a new installment released every single Monday for 3 weeks. So it gives you a lot of time to really get into the course. And usually what I do at the end of a course like this is I then have a live session where you can come in and ask any of the questions you have. You can share the examples of the trades that you had, and it gives that interaction, you know, so you can see, hey, you know, I took this, Toni, but it didn't work out. What do you see? What's going on? And I can very easily give you, hey, this is the breakdown of the trade. This is why you struggled here, but you didn't struggle on this one. And a lot of that has to do with integrating multiple time frames. So you might have a setup that is triggering, looks like a phoenix on a smaller time frame, but it's actually the first correction in a brand new downtrend. And what that would look like would be, if this is the start of a downtrend, you get your pop up, it looks like a phoenix here, right? But you really have trend exhaustion. So your two-wave correction gives you a small phoenix, but it ends up creating a larger avalanche. And that's a big spot that traders get trapped in. If you have more of a rounded low going into a phoenix, it is one that you can have higher confidence on. So a V pivot, that's going to be a little bit trickier, but the rounded lows are going to be easier. So something that looks like what they would call a cup with handle, for example, or inverse head and shoulders, that type of thing. All right, you guys. Well, thank you for having me here today. I know you've got a big lineup ahead of you this week, and I hope you learn a lot more as the week progresses. I know my time is up, so I'm going to turn this back over to John here.
Toni, thank you so much. Guys, before I say goodbye to Toni, I want to let you know her offer, there's a link actually in the chat where you guys can go check it out. And I promised you before she got here that she was super smart and super knowledgeable and you would learn something. And I'm pretty sure that I was right. Toni, thank you so much. That was great.
You're so welcome. Thanks again for inviting me, everyone.
Oh, thanks for coming. Thanks so much. Ladies and gentlemen, Miss Toni Hansen. By the way, the website is tonihansen.com. Check it out. And like I said, super smart woman. I enjoyed it and I learned a lot too. So guys, thanks so much. It says, oh, by the way, there's one question and answer for you, Toni, which is just thank you. You did a great presentation. They actually didn't ask you any question at all. Guys, if you have any questions at all right now, you can fire them in the Q&A section or in the chat. Toni will stay with us for another 2 minutes, maybe, and answer a question if you guys have any.
Absolutely. You can also email me at toni@tonihansen.com.
Oh,
so if
nice.
you can spell my name properly, you can shoot me over an email.
So it's Toni with an I, just so everybody knows, right?
And Hansen with an E. It's Danish, not Norwegian.
There we go. There we go. All right. I think everybody's pretty much great presentation.
Oh, thank you, David.
David loved it. Hey, David, what's going on, buddy? I know David. Well, that's it. Thank you so much, Toni. I hope you have a great day and try to stay out of the sun out in Phoenix.
Thanks, everyone. Take care.
Take care. Bye, Toni.
Bye.
Hey, Rod, what's going on, buddy?
Hey, John. Well, I was amazed by, I love Fibonacci. I really love it. And I think this was really, really insightful. How Toni manages all the fib levels so she can target entries and know how the market will move. I was amazed. So I'm still trying to process all this great information. So to all the folks down there who really want to take it a shot, just go to the link there. And, I think it's a really, really good offer, good price, good content. So far, I'm really amazed and learning a lot, John. How about you?
You know what's kind of cool is when people start to talk to me about Fibonacci, I usually just hear it's like I have no idea what they're talking about, but that was actually really cool. She actually spoke in a language that I can understand, which I thought was awesome. Like and I think everybody else that are probably have much higher trading levels than I do probably followed along just as well. So I thought it was great.
Truth be told, when I first heard about using it in trading, I thought, okay, that's just another bunch of hooey,
right?
Because everybody is trying to peddle indicators, but understanding like, hey, this is the situation you apply it to. You don't apply it here. You don't apply it here. There's a specific set of rules for when to use it and how to move it. That's what is missing from so many of these indicators.
Well, I think that's like a lesson for all traders, and it just really comes from life. You have to use the right tool for the right job. So, and people try to, this one thing works on everything, and it doesn't work on everything. It works on some things, and you have to figure, like you said, you probably made some mistakes in the beginning trying to use it different ways. And, and then you figured out, oh, okay, this is here, and here works. Over here, it doesn't work at all. So I thought it was awesome.
And consistently, like, hey, this has really worked over years, not just in this short extreme bull market or in this choppy trading range.
Yeah, of course. Of course. All right, Tony, thank you so much. Hey, Rod, do me a favor, take over the screen share so we can stay on schedule here and move along.
All right. Take care, Rod. I'm going to stick around and listen to yours as well.
Oh, awesome.
Perfect. Thank you very much, Tony. I really learned a lot. So I really appreciate all this knowledge. And as I said, I dream of Fibonacci. So right now I'm just starting to see, the Fibonacci lines all over my head. So let's go to the next dreams. Yeah. No, it happens to me that when I'm in the streets and I go through these light posts and here in my country, they have like 5 or 6 electricity lines. And I just think of support and resistance, or I look at mountains and I just see charts. So yeah, this will get me a little bit more crazy about trading.
This is a man with 4 children. This is what he sits with. This is what he sits around and dreams about. Most of us are dreaming of like going on a vacation somewhere, buying a fancy car, and he's like got kids screaming in the background. He's dreaming about Fibonacci. So
well, I've got mountains in the background here, so I'm seeing charts like every time I look out the window.
Oh, nice.
I'm actually gonna give my kids presentations from today, John, so they start learning about trading. I've heard
that's the way to do it.
Kids have like a special magic to learn trading because they are less complicated than adults. So then there's some successful kids trading out there. So I hope mine also get
my
to be.
My kid is here.
Traders.
My kid's in the room right now.
Oh, really?
Yep. He can tell you probably about as much about it as I can at this point.
I'm sure.
Since he started when he was an infant sitting in my lap. So
nice.
Awesome. All right. Well, take care, everyone. And I'll talk to y'all later.
See you, Tony. Thank you very much.
Bye.
Bye-bye.